Peace and love, good people. Peace and love. Welcome back to another episode of Money in Minutes. We had a wide state here, +3 position, and we have a bearish power bar. All right, that's one of our favorite events, that bearish power bar crashing into the 21 period moving average. All right, so we entered that bar with our stop above that candle. All right, with our stop above that candle, and we're looking for continuation to the downside. All right, and we're getting that continuation, and we're also looking for a 20% return. All right, 20%. All right, of the price of the option, and we're managing our option size. Now, right now, we're in that trap zone, as you can see. You see how we were moving down, and then that second power bar turned into a tail bar. That's what typically can happen when you're in the trap zone. So now we have a major pullback. It's pulling all the way back up toward 685.36. Now, although I have my stop loss at this particular bar, it's also a reference point for the candle that I entered, but I'm also choosing between stopping at that candle and my max loss, which is $30 or 20%. I should have cut the trade theoretically, like if we're operating from policy, but in practice, I'm still having conviction that we are bearish because of the pattern, this bearish rectangle pattern. As you can see, 1, 2, 3, 4, 4 times this price movement has hit 683, the 685.39 area. So it was rejected 3 times. All right, rejected meaning it tried to go up and get in the house, and the door got slammed on them. Go back outside. Went up a second time, door got slammed on them. Go back outside. All right, we're unbreakable. You cannot break through this particular level. So with all of that rejection, we are anticipating continuation to the downside. Looking back at this video, what I would have loved to do is add a contract on this pullback. But this is a point where I wasn't as confident in the moment. I wasn't as convicted in the moment. All right, now look to the right. Look to the right side of the screen. I want you to pay attention to where I said I'm at a 681 put, where you see that blue check, and notice that I have the ask next to the low. And I like to enter when the asking price is close to the low of the day. All right. Now, as you can see, we are headed back into this trap area. All right, what is the trap? The trap is anytime you get the price operating between 2 significant moving averages, and the 2 significant moving averages are the MA21 and the 50. So the simple period moving average, the 21 period simple moving average, and the 50 period simple moving average. As you can see, it already was rejected. All right, but just like we have a such thing as a MA halt is what my mentor refers to this as, but I will refer to it as an interception. So right now we are moving down. We're moving down, flushing past, but we're in the trap zone. So we're anticipating a pullback, and we want to know if the 21 period moving average is going to intercept the green candle that's about to form and move back up. All right, so there's going to be a bullish candle that's going to come momentarily, and when that bullish candle comes, I want to know if it's going to be intercepted by the 21 simple period moving average. All right, so the new high is looking for the ball, but the 21 period moving average may very well intercept it. Look at that. Look at that. So you see the 21 period moving average is it's fighting with it. It's fighting with it. Give me that, and pushed it back down. That's an interception. We're going to call that an interception. All right. That green candle was moving on up.
Hey there, future trading champion.
Intercepted.
If you're tired of feeling lost in the charts and want to take your trading game to the next level, my Patreon is the answer. Join me for exclusive access to my most insightful chart trading videos, a swing trading checklist, and a dedicated series that breaks down the art of charting for beginners. Plus, you'll get entry to my video vault and the chance to ask your burning questions directly in the Stock Market Daddy strategy room. Ready to level up your trading? Let's dive in. Link in the description. Peace and love, and I hope you get rich.
So that's also considered the break and the retest. All right, we broke through the 21 period moving average to the downside. We came back to retest that level, and then we continue to the downside. All right, so now here we are again at another significant average price. All right, the 50 period moving average, and we broke through that one as well. So now we've got continuation to the downside. Are we gonna make a new low past 684.52? Are we going lower than 684.52? We'll see. But before then, we have to see how we respond to the bottom of this range. So this white line here is the support level from a previous gap. All right, it's a support level from a previous gap. All right, so here I am moving my stop down some. You know, really, I'm really working to master trade management. You know, I do a good job scalping, cutting, getting in and getting out, but I want to be able to manage it a little better for bigger gains. But I do know when you operate on a larger charts, you leave the larger time frames give you more room for error, even though it offers you more reward as well. So right now we're continuing to the downside, looking for 20%. We want a new low or 20%. New low or 20%. We can't focus on dollars. We got to go for the new low or the 20%. All right, so here we are. Not quite a new low. We still see 684.52. Not quite a new low or the 20%. But we are moving in the right direction. Man, I should have added to this play. But here we go. Moving on down to 20%. Almost there. Boom. Took profit at 20%. Peace and love, and I hope you get rich. See you in the next video.